Good afternoon, and thank you for joining us for Insightful Accountants Future Forward Summit. This session is strategies, best practices, and tools to provide advisory services to your clients. I am Gary Dehart. I'm the host of Future Forward Summit, as well as the Accounting Insiders podcast and publisher of Insightful Accountant and Tax Practice News. Our speakers are William Murphy and Charles Nagel, founder and Chief Innovation Officer at Cuvinci. Just a reminder, CPE is available for this session. In order to qualify for the CPE, you must answer 3 out of the 4 poll questions, and you must be present for 50 minutes of this session. If you have any questions, we do want you to put them into the questions panel, and the chat panel is disabled, so you need to put that into the questions panel. And a link to the recording will be sent to you, and it will be, this recording will be placed on our YouTube channel, and I will put the link to our YouTube channel in the chat once I turn this presentation over to Murph. And then also the slide deck, I'll drop the slide deck in there as well. And again, as a follow-up, you will receive a link to both the slide deck and to the presentation within about, I want to say 24 to 48 hours. And if you are looking for that CPE, that certificate will be sent to you also within about 24 hours. If you feel like you qualified for it and do not receive it within 24 hours, just track us down on email. You can just send that to info@insightfulaccountant.com. So I know we have a lot to cover, so I'm going to go ahead and turn this over to Murph, and we will get it rolling. Thanks, guys.
Thanks, Gary. And, I'm not even going to bother to read the title of this. It's so long. It probably could have been shortened to future forward your clients through these inflationary and recessionary times using a great set of tools built by my friends at Cuvinci. Now, for those of you that don't know me, everybody just calls me Murph, and I'm now the senior contributing technical author at Insightful Accountant. I stepped out of the role as senior editor just a little over a year ago to try to slow down. So right now I'm only writing about 16 to 18 articles a month, as opposed to around 30 like I used to. Charles, if you'll just go ahead and advance. So in case you didn't know it, as of this past August, Cuvinci replaced Fathom as the advanced reporting engine for QuickBooks Online Advanced. And you can actually now receive Cuvinci free when you acquire QBO Advanced, either as a new subscription, an upgrade from another version of QBO, or migrate from QuickBooks Desktop. But we'll talk more about Cuvinci and QuickBooks later near the end of today's webinar. So let's move on to the first polling question. And Gary, if you'd go ahead and throw that first poll open for us. We want to know if you have clients or prospects who could be helped by using a tool like this. And I'm sorry for the length of this question, but do you have clients or prospects who could benefit by your utilization of some easy-to-use, forward-looking forecasting and business intelligence tool to help them thrive through the current economic challenge? And the answer is much simpler, just yes or no. We wrote this question up to be real simple, and somebody else rewrote it real complex.
And I think the word is dichotomy, right? Between the length of the question and the length of the answers. That's that cracks me up. So, all right, let's, if you want the CPE, you'll need to answer this. So go ahead and I'll give you about 3 more seconds, then we'll get moving. 3, 2, and 1.
All right. Yeah. So everybody here thinks that they'd benefit by this, and that's great. So as I mentioned a few moments ago, the real emphasis of this webinar is on helping you as a trusted advisor learn how you can help your clients through some of the toughest economic times many of them have ever experienced. Let's face it, Inflation is on the rise. No politics thrown into this at all. The cost of everything has gone up, folks. We all know that. I don't care if you're talking about gasoline in comparison to 2 years ago, or groceries at the store, or even this year's favorite toys on the list of Christmas. They're all much higher. Supply chain shortages coupled with higher demand is the root cause. It's the old law of supply and demand. And with the trend of inflation on the rise, many experts are even predicting a recession is on the horizon. Many small businesses of today have never experienced conditions like we're having. Now, who do you think they're going to turn to for advice when they start experiencing the impacts of inflation on their cost of goods or operating expenses? Or who are they going to ask when they're questioning if they should raise their own prices? I'm certain that that answer is you, their trusted advisor. And how are you going to know what to advise? How are you going to identify the numbers in the red and forecast their future? Well, if you'll change the slide for me, I'm about to tell you how you're going to do that. I have with me today Charles Nagel, the founder and chief innovation officer at Qivenchi. Now, in case you haven't figured it out already, I'm a real fan of Qivenchi. It started way back when the product was in its initial alpha beta, and Charles called me up and asked me to test one of their earliest versions. Ever since then, I've reviewed almost every major development Charles and his team have innovated, and I've written about many of them over the years. The reality is this product just keeps getting better and better. While Qivenchi includes a powerful yet easy what-if predictive business intelligence feature that can produce scenarios and forecasts relating to the impact of inflationary and recessionary economics on businesses, that'll give you a clear advantage in providing advisory services your clients are expecting. I'm just ready to shut up and let Charles tell you how you as a trusted advisor can use Qivenchi to forecast and to do what-if scenarios to bolster your practice. Later, Charles and I are going to actually do some role play, and I'm going to be the, excuse my term, stupid business owner, financially stupid. You know, I know about my business, but I don't know anything about my numbers. And Charles is going to be my trusted advisor, and he's going to coach me through these bad times. So without further delay, here's Charles to tell us how Qivenchi can be a tool that will help you be a better trusted advisor if and when inflationary or recessionary pressures are impacting the bottom line, if and when you needed additional funding, and if and when your costs need to be trimmed or cut before a crisis obliterates that bottom line. So Charles, welcome to the webinar.
Thanks, Bill. We're certainly happy to be here. And, we got a lot of ground to cover today. And a couple of things, the trusted advisor scenario. I mean, you're doing their books, you're doing their taxes, probably you see inside their QuickBooks files, the trust is built in there. And we kind of gloss over that. I mean, who else is going to be more trusted than you by your business client? And so the opportunity, it's baked in, the opportunity to help them decide to identify areas of improvement. We have inflation coming. It's here now. Recession is on the horizon. It looks like it's going to be here. We don't know how deep it's going to be. And what everybody wants to know, every small business, I've been a turnaround consultant for a long time. What every business wants to know is, what is my likely reality? What can I do about it? How can I mitigate these things? That's what we're talking about. And you, as the person that I trust, well, it'd be great if you could help me out here a little bit. If things are going up, what do I do about it? What can I control? And what can I right size? We'll call it right sizing What can I right size my business to? And what kind of tools do I have to help me with that? And what's coming at me? And everybody would like to know the future. Well, you know, I'm going to give an example. We have a number of tools inside QVenture that you just click and run and present to your client. We're not asking you. The trusted advisor role, when times are uncertain, that's when everybody wants advice, right? That's when it becomes more valuable. So the timing is really good. So what we're not talking about is going in and fixing the problems with a client. What we're talking about is making them aware of things that they can do, right? And so traditionally, accountants will give out financial tool, statement of cash flow, balance, and all that's good, but it doesn't show them what to focus on. They have to go dig it out for themselves. So as an example, we're going to go through some tools. This is an example of one. This is like a mini lightweight forecasting tool. And what this says is this, and we're going to see it shortly. If I take your last 2 years of performance year over year, and I take your last 90 days, and I project what you have done year over year over the next 270 days, this is what you're going to be. You know, Einstein said to keep doing the same thing over and over again, but expect different results is a definition of insanity. So what you have done is a good predictor of what you will do going forward, barring any major changes. Of course, you know, there's major changes coming, and that even throws a bigger variable into the equation. Our tools will show them where they are, what they've been doing, how they're doing right now, short-term, long-term trending, and where they're going. And then they, through you, can mitigate some of those risks by making changes. This is another example of a tool we're going to look at. It's called a What If Forecasting Cash Flow Optimizer. This is one part of this tool. And it's something that you run for your client, takes you 30 seconds, and you download it to Excel and send it to them, and it's dynamic. And it shows their cash flow as a function of all the P&L accounts that are happening, and it lets them play what if. You know what? I got a consulting fee. What if I drop that down by 10%? What happens to my running cash balance when I do that? Actuals in green, what if in blue. The tools will give you that interpretation. It'll also give you snapshot data like this. It shows, you know, hey, your top 5 expenses month over month as an example. Actual versus what you said you wanted to do, okay? But at the end of the day, what it comes out to being is that we have an indeterminate financial future. Inflation can continue a lot. We can have a recession. Certain industries can have a downturn. And we want to design a likely reality with from where we are today, last month, month before. I want to see where we've been and design where we're going, and then monitor those results along the way. And you are the doorway through which these tools get provided to a client. It makes you the advisor. Again, you're not fixing their problem, you're just giving them advice. Now, sometimes I show this one as an example. Sometimes you have clients that have complex businesses and they have a desired complex report that you'd like to have. And it's difficult to do manually. And QVenture will allow you to, in addition to our business intelligence tools that you'll just run by default, to build and author, we'll even help you with it, build and author highly customized reports that'll run across 1 to thousands of entities for that client that's difficult, that has special needs. Think of it this way, automated customized reporting. Who can afford to do this kind of thing manually every month on financial and non-financial data? Well, it's impossible to do it manually. You'd have to charge them an arm and a leg, and they probably wouldn't pay it. So QVenture is an authoring tool that would allow you to build reports using an Excel-like interface, okay, that will automatically populate for your clients, no matter how large they are, no matter what industry they're in. But today, we're talking about advisory services, okay, and how you can be an advisor. We're going to role play that in a minute. Don't get hung up on trying to solve a client's problem. You're not solving, you're making them aware and giving them tools that they can affect the future. So Bill, I think we're ready for that second polling question at this point.
Gary, you going to throw open that poll? So we're going to ask you, what financial forecasting and business intelligence tool do you already use to help your clients forecast through inflationary or recessionary periods? QuickBooks, Microsoft Excel, other third-party software, both QuickBooks and Excel, or none of the above? And remember, you need to answer all of these polling questions if you're interested in CPE.
I will leave this open for a few more seconds and then we'll close her down. So if you need the CPE, you will need to participate. All right, about 3 more seconds. 3, 2, and 1. Thank you.
Okay, thanks. So we're going to move on. I've got one more slide, then we're going to take a look at some of the tools inside KeyVenture that you use as an advisor. That's going to add value to your practice, going to make it easy to be an advisor. And I'm actually open the app and show you what it looks like inside the app. We have these 4 legs on a stool, the client advisory portal. It's called the portal inside KeyVenture, and it shows you a landscape view across all your entities, and it has these 10 key performance metrics. These are tools that we have, these are analytics that we have automatically rolled up for you across all your clients, no matter regardless of the industry. Now, after you take a look at the portal and kind of identify a few things potentially, you may want to, you're going to want to start delivering products to your clients. And one of those is what we call the KPI scorecard. It automatically adapts to any client that you have. It automatically builds off the chart of accounts and does trending period over period. We're going to, grade our past and predict our future. It's going to show them in a color-coded format. Red's bad, green's good, arrows, stoplights, that kind of thing, and charts and graphs. With a click of a mouse, like 30 seconds, you click a download for a given client and this scorecard is created. So in addition to creating scorecards, you want predictive analytics, and that's where our forecasting tools come in. So once you have an idea of what you need to work on, we'd like to have a tool that allows us to predict the future. And so that's predictive analysis. It's reports inside KeyVenture. Reports in KeyVenture are not typically like everything, other kinds of reports. They're really templates. You select the entity, you click download, and it gets populated with that client's data. But the interpretation and the presentation, the style is exactly the same. And then after that, that's when you provide the traditional financials, which you'll do through KeyVenture anyway, P&Ls and balance sheets. P&Ls and balance sheets, if you have a P&L across 12 months, and your chart of accounts is 60 lines long, there's 800 cells on that P&L. Well, you want to look at that after you look at this and look at this to know what to focus on in the traditional P&L. And so that's kind of how that works. That's the philosophy. Business intelligence first, okay, and then detailed data next. Now, this is a screenshot of the portal. I'm going to go ahead, since that's small, I'm going to go ahead and move the app over here. This is the portal. Your clients do not see this. You see this. You log in. These are all your clients, QuickBooks files, classes, whatever. And all these cells on here are hot. And KeyVenture is automatically rolled with the analysis. And I'm not going to get into the portal deeply. I'm just going to show you a few things. This is analysis across these metrics. Top 10 expenses, month over month. Top 10 expenses, fiscal year over fiscal year. Change the year. And all the metrics change across all the entities. And we're looking for red. Red's bad. Green's good. And when we see something like this that says the top 10 expenses is 11% higher year over year, we can click that cell and up comes the card that tells you for Apple Family Dental, here are the exact charts of accounts year over year and how much they've moved. We're going from general to specific. We're beginning to see what the levers are that we need to push. You'll see the chart of accounts is different here than it is here. Dental supplies is a much bigger piece of the pie here than it was here. And then when you want to know more, you'll click here and it'll drill down and bring up the P&L for you. I'm not going to do that now. Everybody knows what a P&L looks like. And from the P&L, when you see the P&L, you can actually click the cell and drill down to the general ledger transactions. You can go all the way from a high-level portal view down to transactional data without ever opening QuickBooks. How long would it take to go look at data and then open every QuickBooks file and start digging through P&Ls to try and find areas to help your client? Well, it's impossible. So KeyVenture automatically rolls up the business intelligence for you, but lets you drill down to the underlying levels. You can drill down, you can do certain kinds of things that in this particular column, track, are the books closed or not? If you're servicing a franchise, for instance, the franchisee may be doing their own books, and once they close it, it's going to show up here that here's the month. They're saying that the books are all closed, or your own staff warns that the books for this client is closed. We're ready to report, in other words. Report is complete, account is complete, we're ready to report to the client, ready to send the scorecard to the client. And all you'll do is you'll come in here, select the periods, okay, and look at the metrics across all your clients, and then go run reporting for that client by clicking that client. And so that in a nutshell is how you enter the KeyVenture ecosystem. You start at a high level in the portal, and then we begin to move down a level like I showed you here. The portal is how you navigate through from general, drilling down to underlying data, drilling down to detailed reports. Now, one of the things you're going to want to do, and we're going to talk about this, that what clients want to see from you is not all the detail to begin with. They're going to want to see what we call scorecards. This is an example of a scorecard that Keybench builds automatically. You don't have to do anything. Select the entity, say, give me that template, and it will automatically populate the chart of accounts for that entity and do all the analytics and color code everything, showing periods over periods. And if it's a multi-entity system like a franchise, how it compares to all the other entities in that ecosystem. For instance, we have accounting firms doing this as an example. I got one accounting firm, all they do is dental clients. And they deliver this report to every dental client, and it shows how that dentist compares to all the other dentists they are servicing anonymously. This is the kind of level of business intelligence you can provide to a client, which they can never do on their own. And as an advisor, this kind of detail that shows them where to focus their attention is the value that you have for the client, making the difficult to find easy to understand. Bill, we're ready for that next polling question, and then we're going to get really close to moving into the role play system.
Okay. So what is the biggest obstacle to prevent you or your firm from offering more advanced cash flow and forecasting? A lack of know-how or resources required to launch those services, a lack of vendor support to help jumpstart those kinds of services, or a lack of client demand?
All right, well, let's go for about 5 more seconds. If you need the CPE, you do need to participate, please. Otherwise, we'll wrap this up in about 3, 2, and 1.
Okay. So let's talk about what we have for accountants, and it's called the Turnkey Advisor Program. And it's 3 easy steps. It really is. The first one is called Review the Metrics. And that starts with the portal that you saw. We're going to review the metrics, take a look at color coding. We're going to see those clients that are maybe on the hairy edge of something, right? Drill down underneath, look at their top 10 expenses. Take a screenshot of those top 10 expenses to show you and send them off to Bob. Hey, Bob, I was running this tool that we have, and maybe you didn't really realize that, you see what I'm saying? So the ability to digest data and deliver it to the client. Now, the second step is to generate the reports, and that's where we go and run the KPI scorecard, the trending what if forecasting tool, financial reports, these tools that we have already built for you. Excuse me, the tools are built, and so you run them and you take a look at them, okay? And then those become how you engage the client. You dump them to Excel, and our authoring tool has all the power of Excel. So when you export something to Excel, it's smart. In other words, all the formulas are there. And then the what if, they can go in and make changes to them dynamically in Excel, just like they're inside Keybench. You're sharing an intelligent report with them. And spreading the word is where you send it to the client. Now, you can also use this capability to send it to your peers inside your firm. It's a way of saying, hey, look, guys, I'm running this tool for ABC Vacuum over here. I think it might be beneficial for your clients over there. And you can use the same process here to download samples and send to peers inside your firm, or samples to send out to prospects you might have. But it's a 3-step process. Review the metrics in the beginning of the month, download the KPIs to send to the client, and send them out to the client, because it's delivering the business intelligence to the client that's important. This is the workflow. Simple, easy, and frankly, per client, 5 minutes a month, maybe something like that. So, Bill, I know we have one last question to do, and then you and I are going to go a little bit deeper, and we're going to kind of hop into a role play of how I'll be the accountant and you're the client. So let's go ahead and do that last question.
And do you do you believe your clients would respond positively if you provided the type of forecasting and financial modeling tools that we're discussing in today's webinar?
All right, we'll get this a couple more seconds and then we'll close it out. If you need the CPEs, your last chance. 3, 2, and 1. Thanks.
Okay. So we talked about the 3 steps, right? Here it is in an outline format. You log into Keybench into the portal. You select the client and you download to Excel these 3 reports that we have built for you. Auto KPI scorecard, trending and forecasting report, and the water forecasting optimizer report. We're going to role play this in a minute. You're going to look at each report and you're looking for negative trending indicators or values. You're going to spend maybe 5 minutes total looking at this. They're easy to digest and easy to understand. You're looking for things that need attention. If it's green, leave it alone. There's nothing wrong with it. The first time out, we're going to ask you to edit the what if forecasting tool and make a few adjustments, suggested adjustments. It's going to take you, I wrote 10 minutes, I can do it in 3, but 10 minutes, 5 minutes, something like that, because this is the first time you're going to do this, the first time to kind of show your client the kinds of things they can do. And then we're going to engage the client. You need to set up a 15-minute virtual meeting with them, 15 minutes tops. And what you're going to do is you're going to email these files to the client. And on the meeting, you're going to point out and discuss those items the client should address and the forecasted adjustments that can be made and monitored by the client. So we're introducing in the very beginning, the client will make a few adjustments, and then every month you're going to download new copies. It's going to have updated data in it, and we're going to send the updated what if forecasting tools as an example. It's going to show actual versus what we said we wanted to do. And you probably want to meet virtually with them. Now, let's talk about advisory services real quick, okay? It can be as deep or as thin as you want it to be. I run these reports, I send them to you, Murph. That's it. I'm just making you aware. You use them at your discretion. I just want to deliver business intelligence to you after I introduce it to you. If you want to go a little bit deeper and have a dialogue with them, then you would set up a monthly virtual meeting to discuss this. Of course, you're going to bill at whatever rate you want to bill at. But you're not solving their problem. You're simply making them aware of areas that need greatest attention that could be, maybe need to be right-sized for how the business is doing. That client is the one that runs the business. So we're going to take a look at that. We're going to do a role play here in just a second. I'm going to show you what they look like inside Keybench. Just a brief note, all Intuit, like Murph was saying, all the Intuit products are cost-effective in one single source package. You can actually get QuickBooks and Keybench combined through Keybench. The data migration, training, and support is all available. It's a one-stop, one throat to choke, as we say. When you come into Keybench, we have the ability to be one source, a single source, if you will, for accountants, and whether you're a franchisor or accountants, multi-unit business, diocese, we work in any industry. And we have the ability to provide those tools to you at a single point of contact. I'm going to show you now what you see as an advisor when you go run these tools. And I've already done them here. So here's the scorecard. All I did was I came to the advisory, I clicked that entity, Ballad Dental, I believe is the one we're working on today. I clicked Ballad Dental and said, give me the KPI scorecard, and here it is. And so it automatically populates. This is how this tool works for you as the advisor. It automatically populates the top 5 income, other income, top 5 COGS, top 5 expense and other expense, and does this analysis for you. You don't have to know anything. Click the client, click preview, and this comes out. Now, I should mention, because we're going to send this to the client, we have a guidance tab that shows them what's been pulled and how it gets calculated. The next thing will be here, because when you download this, this looks like Excel. It's going to play just like this for the client in Excel. And we're going to populate the last 12 months of data, and we're going to populate the reporting month in question, which is October, and the prior month. And these ideal range is a 2% swing around the average of the last 12 months for that client. This client had an account called surgery. They averaged that amount, and their low is 231 and their high is 241. And I want to know how they did. And if they did well, it's green. If they're in range, it's black. And if they did not make this range, it's red. This column shows how they did the reporting month versus the prior month. Are we trending favorably or unfavorably? Red X's are bad. So now we're beginning to see the largest movers, the actual numbers, and how they're moving relationally. Once we see this, what is the next thing we want to do? Okay, well, let's take a look at the top 10 expenses, and here it is. Okay, and so it's going to list the top 10 expenses. Now we're going to role play all this, so I'm not going to go through this in detail right now, but this is what it looks like inside QVenture. If you're going to run the what if forecasting tool, it looks like this in QVenture. Again, select the client, click run the what if tool. This comes out, automatically builds the chart of accounts. You select the periods. Green is the current month, is the actual running bank account balance. The blue is what if. If you continue doing what you've been doing starting in September, this is what your bank account looks like. And here's all the metrics. And this automatically updates. Every time you open this, the actuals will get populated. And you download this to Excel right here, export to Excel, and it's dynamic. You can put data in and make changes to it. This is what's cool about this, is when you send this to the client, they can play in the sandbox. The client does not log into QVenture and run this in QVenture. You as the advisor run it and deliver the exported tool to them. Okay, and that's what it looks like in QVenture. Very simple, very easy to use, very easy to understand. And it runs the same way on every client, just automatically bills. So I tell you what, Bill, are you ready to do some role playing now?
I am.
I'll tell you what I'm going to do. I'm going to go ahead and run it as though I'm talking, you're my client and I'm you, yeah? And I'm going to send you, I'm going to show you what I'm going to send you. So here's the Excel file of the first thing we want to look at, Bill. So you're a dental client. I'm the advisor. So Murph, thanks for joining me today. And I know we're doing your taxes and we're doing your accounting and bookkeeping. You know, I've got some tools that I think are going to help you, that I know are going to help you make more informed decisions. And I appreciate you just giving me about 15 minutes of your time here. I can provide these to you each and every month. And I think what you're going to find is that it's going to give you some business insights. You can make some decisions and we can forecast a likely reality, a likely future. So Murph, does that sound like something?
Absolutely, Charles. I've been kind of concerned about this past month.
Well, yeah, well, you know, it's a serious time, isn't it?
Yeah.
So these tools I've run against your QuickBooks file. This is your data for your practice, okay? So let's just kind of take a look under the hood real quick. The first thing is when I send this to you, you're going to get 3 Excel files, and these got these explanations of understanding business intelligence, how to interpret what you're about to see. The other thing is we have certain ratios in here, and we explain what those ratios are at a high level and kind of how they're calculated and what they mean. So when you want to know what the current ratio is, it's a measure of a company's ability to pay short-term debts and other current liabilities. Okay, that's what it is. So we don't just throw a bunch of numbers out there. So this is on the front end. So let's take a look at your first things here. Now, Murph, green's good, red's bad. We just don't want red. And so here's what I ran this one. I have other periods. I ran this one on the last month and the prior month. So the last month versus prior month is trending unfavorably to the tune of 8%. In other words, revenue is off. 442 versus 471 month over month. Now, while this is showing, go ahead. You have a question?
No, that's what I was afraid of.
Yeah. And so now when you're interpreting this data, Murph, operating profits of negative 15 is 15 points. That's not good. It's better than the prior 17. It's trending the right direction, but it's still not good. So make sure you look at the numbers, not just the indicators, okay? Because some things are bad, but not as bad is what's telling you here. Cash on hand, 457 versus 474, we're trending down fairly significantly, okay? And this one's really bothersome. We got 1.4 months of cash reserves. It's about what we had the same month, you know, but it's very fractions off. We really don't want to be 1.4. We want to be, you know, minimum of 3 and probably 6. So cash is low here. And you're going to see that down here in your liquidity. Remember we talked about the current ratio? you got a quick ratio of 0.21 and a current ratio of 1.26. This ought to be about 2. Okay. And so you want to pay attention. If you have any questions whatsoever, I'm just introducing to you now. Take a look at this. Go home, open it up, take a look at this. If you have questions, give me a call. We'll schedule another meeting to go over what you do about it or how you interpret this, what it means to your business. We do see this down here, though. You know, we'll get a net income. We got 2 months in a row of negative net income. So this is the short-term view. Let's take a look at a longer-term view, fiscal year of a fiscal year, all of 2022 versus all of 2021, and it's all red. And this one's particularly disturbing. As you can see, sorry about that, as you can see, $6.8 million last year, 3.8 this year. I have a huge downturn in revenue here. Excuse me. Cash on hand, much less than last year at this time. Almost $200,000 less. The ratios are almost the same thing. And so you can take a look down here. You know, last year you had an income of $2.2 million. We have lost $23,000 for the year. We have a huge downturn in net income, probably because of this. And what this kind of leads me to believe, Murph, is that we've had a big hit to revenue, but our cost structures are the same. That's what it looks like on the surface, but digging in deeper is going to tell us a lot of that. Now, the next thing we want to look at is the top 10 expenses for the reporting month for October versus September compared to the same October last year. Here's your top 10 expenses in descending order. These are the big ones. And this is the percent of total income. And if it's red, that means it's unfavorable to the prior month. 10.6 also happens to be unfavorable to 9.3. Now, you've been taking the same amount of money, but your revenue's down, which is probably why this is higher. Okay. Office space, there's not a whole, do you have a question?
No.
Okay. So office space, there's probably not much you can do about this unless you can shed some load. It's a fixed expense, but it's higher than last year because revenue's off, but the expense is the same. And what I'm leading to here is that what we're going to want to do, Murph, when I send you some of these other tools, is you're going to take a look at making adjustments as you can. What is really doable, okay, to right size the organism for how it's performing right now while you're moving through this ecosystem, because we can't have the cash bleed down. We've got 1.3 months of cash. We can't bleed cash, right? So management consulting, 34,177, better than last month, better than last year. So you've made some adjustments here, but it is the 4th largest expense you've got. That you have here. And then you got professional dues. And so you're going to want to look at these, especially the red ones that show month over month. I'm going the wrong direction month over month. It got higher. And in view of what are we going to do about that going forward? Fiscal year over year, everything's much higher as a percent of total income year over year, except for this one, your wages. So you took a little bit of a pay cut from last year is what you did. But this is all higher this year. And this trend cannot continue as we're about to see. Here's your month over month, year over year income and net income charts. And if it's red, we don't like it. So here's your last fiscal year monthly income and what you did this year. Here we are in October, and every last one of these is lower. By the way, you knocked it out of the park last November. So every one of these is lower. So the gray bars are last year's income. The blue bars are this year's income. And the variance is this one, and we don't want that variance to be, you know, the lower this gets down here, the worse it is, right? The net income year over year. Last year, you made healthy gains. This year, we're riding the waterline and frankly losing money if you add them all up. And here's the difference between each month from last year. 258 versus 26, 277 versus 14. And you can see this chart down here with this net income trending down. So we're going to want to do something about this while there's time to do something. We're going to design that future, right? And then here's that little chart we looked at earlier. If you keep doing what you've been doing over the last 2 years, movement-wise, starting with the last 90 days, projecting the next 90, 180, 270, this is what we're going to be going forward. And I'm going to send you this tool each and every month. We run it every month and everything automatically updates. Next month, it's going to be December versus November. You're going to look at the same tools. You're going to come in here and look at this. You're going to see how it moved. We're going to want to see how these expenses moved month over month, as an example. Does that make sense?
Absolutely.
Okay.
Yeah.
Let me bring up the scorecard now. Now the scorecard goes a little bit deeper. Again, it's got some guidance on the front end. This is where we get into actual numbers and movement. And so we're looking at your top 5 income accounts. Now, good news here. So this is your last 12 months across all these accounts, 236,701. You actually did 268 of surgeries. Okay, so that's up. But this one's way down. You've averaged 225. You did $165, about $60,000 off here. Prior month, you did 199. This is red because it falls below the ideal range of your average that you did last year. And this is a red X because it's worse this month than prior month. That's a red X there. Okay. We care about red. Supplies are dramatically up, $102,000 versus an average of 83. You may want to take a look at how you've been purchasing, what you purchased. Did we overbuy? Did we buy at a wrong rate? That kind of thing. We care about cost of goods because it affects gross profit, right? And then here's your top 5 expenses. And we're looking at these costs here. And some of these are, you know, again, we point these out because we're about to go look at a what if tool and what we can do about it. Okay, so summary KPIs, and then here's your ratios. And all these ratios are worse than last month's ratios, are worse than the average 12 months. And that's because our sales are down, but our costs are the same. That's what I think it is. We'll take a look at the top 10 expenses. Again, month over month, the same chart as we saw, same chart we saw as the last time. We probably want to do something about this. If our revenue is going to trend down, these are the big levers that we can move on. Okay. Got the year over year chart, the same thing. Here's your running cash balance. Now, this was not in the last chart. It's in package. It's in this one. Running cash balance month over month, year over year. Last year, you had $125,000, and we were bleeding a little bit of cash. And you can tell by looking at your balance sheet that you went and took a loan because we have a big infusion of cash in the bank account. And we now went from, you know, in May to $641,000 versus $76,000. So you took a loan out, is what it looks like. 2 rounds of loans. The first one came in here, and we were bleeding a little bit and bleeding that down. And then we took another round here and it pumped it back up. And what started happening in January is we began to eat into this bank account because we're losing money every month, and the P&L shows that every month as we're moving down here. And so we can't keep this trend because we're bleeding off the cash that we borrowed. We can't have that. We need this trend we want to reverse. I would discuss the AR and AP, but you're a dental client. You don't have AR and AP, so we don't need to discuss AR and AP at this point. But this is a trend we want to address. We want to arrest, right? I mean, this is not something, I'm assuming you're not very comfortable with this trend at this point.
No.
So I'm going to bring up the last tool that I've got for you. Now, we've got a ton of tools. Let's just focus on the things that we can do right now. So this is called the What If Forecasting Optimizer. And green is your actuals and blue is the forecast. So 457 in October to 452 in November. We're going down. Now, what I did was I just selected, you know, we're going to start with September. Your September P&L, I click September, it populates the entire P&L here. And we're going to forecast October. We're going to forecast what if going forward based on replicating September. By the way, September was a better month than October, remember, when we looked at the KPIs earlier. So this is the optimistic forecast. All these months are based on, what if months are based on September. If we keep doing September, this is what your bank account's going to do. And remember, September was a better month than October. So what you can do when I send this to you is you can go in here and change these what if values. We're trying to positively affect this here by controlling costs down here. Does that make sense?
Yeah.
Okay, so let me go ahead and I'm going to freeze the pane here for you. So now I froze the wrong pane. Hold on a second. Let me unfreeze that real quick. Here we go. So we're going to come down through here. Let's just do this right now, Bill, real quick. Okay. This is your actuals and this is your forecasted data. So let's come down and look here, and I'm going to zoom this up. Maybe you're having difficulty seeing this on over the internet here. So I'll give you an example. You got this management consulting fee. I noticed when I was looking at this for you, 92. Management consulting is averaging about $48,000 a month, but our sales are off. So is there anything you can do here on these months going forward on controlling this cost? I mean, what are you comfortable dial? Can you dial this back to 70%, 80%, something like that? I mean, is this fluid? Can we make changes here?
I think we probably can dial back management consulting to probably 85%.
Okay, I'm going to put an 85% in there. And when I do, you see what happens here. And I'm going to do it the next month too. 85%. And we $10,000 more in the bank. And so this is all I'm going to ask you to do. I'm going to send you this template, and I'm going to ask you to cherry pick what you think you can actually do without harming the organization. You got professional managed services down here. Again, here's another opportunity, I think. 31,000, 44,000, 44,000. You're religiously spending $45,000. Same kind of thing. What kind of adjustments are you comfortable making to professional service fees?
I think we want to change those professional service fees to essentially a factor that would be the equivalent of November's 31,000 because we've dropped down those services and that we're bringing in the income, and we need to have those related.
So that's about, so by putting that number in there, it's about a 30% reduction. So I'll go ahead and key that in here. Okay. And you can see what's happening to your running bank account balance. I mean, we're having a pronounced effect on that, on what we anticipate to happen. Okay. We arrested it kinda. So let me ask you this question. You got a marketing thing down here, and I was looking earlier that we've kind of cut the marketing a little bit. Do you think this marketing is having an effect on your dental income where we took a haircut on, in October? In other words,
yeah, obviously we could do some more marketing. There is a reason why the dental income itself has declined. And one reason for that was, and this may not seem to be true because you're going, well, COVID's over. But the problem was that during COVID and there was a decline in people coming in, those people didn't get rescheduled. And so what we've got to do is we've got to get our people back to trying to get people back in for their regular visits that haven't been rescheduled because they didn't reschedule during COVID.
Okay, so do you think that you can, so we can't do anything about November, December's right on top of us. Where are you comfortable making adjustments?
I would say we should try to progressively increase those by 5% month over month, a 5% month over month increase. So like 105, 110, 115, et cetera, et cetera.
All right. Well, I'm going to make these 3 months of adjustment. You get the idea. I'm going to send this to you. It has this change in it. You can continue on, but you can see what we've done here.
Yeah.
And we pushed that problem way out, right? And so I'm just going to ask you to go through with a fine-tooth comb, just spend some time looking at each one of these lines and making any adjustments up or down that you think you need to make, whether salaries or whatever. And then I'm going to ask you to send it back to me, and I'm going to put these into the master template so that we just run it and everything automatically populates and we see how we're doing. And we'll revisit this each and every month and just kind of see how you're doing. Maybe it's not 110, maybe it's 113. Now we make an adjustment to 113 and move forward. Does that make sense?
Yeah.
Okay. Let me ask you this question. These tools I've got for you, I mean, are you getting these tools from anybody else? I mean, do you think they're valuable, or is there something else you'd rather see? I mean, what do you think?
Oh, I think these tools are great. And I think definitely this is something that I've been needing to see because I was real concerned about how my cash was going. And I knew that we were having expenses on the rise, and I knew that we were having income on the decline. And now I can see exactly what's happening, and I think we can try to start figuring out what we've got to do to fix it.
Okay, great. So I'll call the role play done now, Bill. We spent about 15, 20 minutes on that at this point. I think it's about the way it should go. Having been a consultant, I will tell you, and we're out of role play now, having been a consultant and had a lot of clients over the years, all they want is someone to talk to who can point them in a direction and give them something they can make an informed decision with. That's really what people are looking for right now. Okay, they're not asking you to solve every problem on the planet for them. They just want someone to help show them ways to make better decisions, more informed decisions. So, Bill, I'm going to turn the presentation back over to you, let you wrap it up at this point, because I know we're getting close to the top of the hour.
Yeah, I want to say that you know, as we've talked about several times here, and there were questions about using QVenture with both QBO and QuickBooks Desktop. Certainly, QVenture works with QuickBooks Desktop, and they've got great accessibility to your desktop products, just like they've got to the QBO online product. And they can give you the same functionality that you've seen here. Another question was, can't you scare your client with all this data? And Charles went through this, you know, he's so experienced with it. He went through it so quickly. And the first time you do this, folks, you're not going to be Charles. It's going to take you a lot longer to do this with your client. So you may wind up scheduling an hour-long conference, but you're going to get better at it as well. And your client's going to love hearing all these things. And you may have to take it in bits and pieces. Go through the scorecard in one segment, go through some of the other analytics, then go through the what if. And your client really is going to be interested in all this data, and you can overwhelm them if you try to give them too much in one bite, so to speak.
Hey, Bill, let me share a real story with you. We had someone, because we launched that what if tool during when COVID started. We had a lady that owned a chiropractic firm, and she took this tool, and I did exactly what I just did with you with her. And she went and ran it, and she contacted her accountant and said, I think this thing just saved my business. You should call QVenture. So you can be as analytical and as advisory as you want to be. Some of our accounting clients just say, I'm going to give you these tools, you know, it's for your consumption, you know, and let me know if you have any questions. If you want to be like with her, she was scared because she didn't know what was coming, right? And so I walked her through it, and I said like this, and this, and this, and we were using her numbers, you know, and you know, she was very appreciative of that because then she knew exactly what to do, which is kind of the deal. If you present something to someone that shows them what they can do from where they are, that's as good as it gets.
You know, Charles has a great onboarding program for you, and also the Turnkey Advisor program is built for QuickBooks Pro advisors, really, to help you expand us into just exactly what we've been talking about. So I encourage you to, you know, at least spend the time to see a full demo of the product, maybe a free trial, and work with the people at QVenture. As I said, I've been impressed from this since before it was actually in production. And I think you'll find that's probably the main reason why Intuit chose to migrate from what they were using with advanced QBO Advanced to QVenture.
Mhm.
And so I think that's just about really what we've got. We might have one or two other questions that, well, I think those have both been answered. I did say, yeah, I answered both of those. So, Gary, do you have anything else?
I think we'll wrap it up. So thank you both for that presentation. I think these types of, as a small business owner, these types of tools are, I think, priceless is the right term, and the knowledge to kind of be able to understand, the highs and lows and the landmines that are sitting out in front of us. So thank you, Charles. Thanks, Murph. Also, just as a reminder, we'll be kicking off our 2023 Top 100 Pro Advisor program in the next week or so. Again, we still haven't settled on a date yet, but we're working on that. But just watch us on social media as well as the site and the newsletter, and make sure you participate. Again, thank you all for joining us. Murph, Charles, thanks for spending an hour with us and sharing your knowledge.
Thanks, guys.
Have a great week.
Ciao.